Imagine, you rise to a new day and the stock market has collapsed. Are you ready for such a scenario? The economic terrain we traverse is littered with monetary ups and downs, with signs hinting at a looming financial disturbance. A forecasting instrument that has been continually precise in predicting market inclinations over several years is currently warning us of an approaching hurdle. The stock, a product of volatility, is inherently capricious and prone to abrupt shifts. Recently, we have noticed considerable players like Skechers and McDonald's in a perpetual state of flux. According to the enlightening piece on Yahoo Finance, Skechers is not only gaining more of the market share, but also preparing for potential disturbances. https://finance.yahoo.com/news/bond-bulls-look-2000000086.html. Meanwhile, McDonald's is expected to witness a negative trend. This extensive report further points out that amidst these fluctuations, bond bulls are offering a golden opportunity for investment, beaming a glimmer of hope in this rocky financial atmosphere. As the historic data, our dependable predictive tool, and the research outlined in the Yahoo Finance piece continuously affirm, market crashes are an inevitable part world. This sentiment is backed by the critical insights presented in the article, underlining the market's cyclical nature and the potential tempest it might soon face. To comprehend what lies ahead, it's crucial we cast our gaze backwards. Studying historical market downturns imparts invaluable insights, often laying out patterns that resurface in the future. Take, for instance, the notorious Wall Street crash of 1929, a catastrophe precipitated by unrestrained speculative trading and feeble regulations, ultimately paving the way to the Great Depression. Shifting gears to a more recent example, the dot-com bubble burst at the turn of the millennium, a flameout largely driven by the inflated valuation of tech startups. Subsequently, we faced the 2008 financial meltdown, a crisis stemming from perilous mortgage lending practices and a lack of robust financial oversight. Interestingly, each of these economic calamities was ushered in by periods of buoyant optimism, lax oversight, and unfettered market speculation. Although history may not exactly repeat itself, it certainly tends to echo. Consequently, it's worth noting that the same economic indicators that have foreshadowed past crashes are currently blinking red. According to detailed studies market crashes, these key indicators include rising debt levels, increased investor speculation, overinvestment in particular sectors, and the loosening of financial regulations. As we stand today, these indicators are looming large, warranting cautious attention. So, which sectors could take the biggest hit in case of a market plunge? An industry that frequently finds itself on the chopping block is the footwear industry. Titans such as Skechers, despite their solid market footprint, are at risk due to cutthroat competition and plausible disruptions in production, especially in zones like China and Vietnam. The next sector which might experience a squeeze is the fast food industry. Giants like McDonald's may witness a plunge in their operating profit margin owing to drivers like commodity, utility, and wage inflation. Keep a keen eye on these sectors as the market keeps on oscillating. But what might the future of the financial markets hold? As we peer into the economic crystal ball, high-yielding closed-end funds and longer-dated treasury bonds remain as potential avenues to explore, especially after the recent sell-off. Projections express a positive outlook for the broader market, underpinned by robust consumer spending and consumer earnings that have exceeded our expectations. The projection wheel hints that the Federal Reserve's tapering process may not lead to quick rate hikes, which could further propel market progression. Strategies like favoring a buy-and-hold approach could yield both income gains. While our projection models do predict some turbulence for the footwear and fast food industries, it's important to keep in mind that industry giants like Skechers and McDonald's have weathered numerous challenges. While no one can predict the future with complete accuracy, fortified with projections and informed forecasts, one can certainly navigate the often turbulent waters of the financial markets.